What's up, everybody? Good morning. Y'all ready to get started? Good morning, everybody. All right, market opens in 6 minutes. We had major earnings last couple days. We had Microsoft, Tesla moving the market up. All positional data is looking a little wonky. Not really feeling super confident about anything in the market yet. We're going to trickle up and trickle up and trickle up, but I think towards the end of earnings, market's going to start selling again. All that positional data looks pretty bad. Making inferences today. Live trading challenge starts. Fully transparent. 10K to 100K or zero, whichever happens first. I love it, love it, love it. Done one of these before. Last one we did 70-day win streak right out the door. And today, guess what? We're opening Irrational already, a sit-out day from the start. It's kind of like, you know. But hey, guess what? We can start off and take a look at what things are doing and kind of be a little careful getting started. I got the Rocket Scooter platform up front and center. You guys make sure you head over and check out that free trial there. I'll give you guys some links and just hang tight for just a minute. I have my DD bands on the chart. We are starting Irrational, one of the 5 rules that we have that tell me the market is going to be unstable and possibly unsafe to trade. The bias looks a little bullish at the open. We've pressed beyond a risk interval. This is one of the Rocket Scooter calculations. I have 2 green bands on my chart. Anytime you're outside of those green bands, it's not really too safe to day trade. So what I want to do is be inside of these bands to catch a dip to take a long on. I have some rules I'm going to follow. We'll detail those a little bit into the market day. But the rules are going to be very strict. It's not just a race. It's not just to get there as fast as you can. That's why it's called the marathon to 100K. You can watch me scale my risk appropriately. As the account gets bigger, my position sizes get bigger. And you'll see all of those rules and techniques. The way the format's going to go as we live 15 minutes pre-market every day here on YouTube. I'll stream for about an hour and a half. Really, I make one trade a day. That's it. I get in, I get out, I'm done, usually within an hour and a half. I will stream every single trade live. Nothing will be done off camera. The account number and account balance is on the screen on the top right, so you can see that it's real. The last one was real. The last 10 of them are real. All my challenges are real. I don't think I've ever made a paper trade a day in my life. So stay tuned for the realness. The transparency is unbridled. I have 6 points of transparency, as nerdy as I am to label stuff. You can blame my engineering degree for that one. Each transparent point is account number on screen, account balance on screen, account history and stats will be shown, no positions and no trades taken off camera. So there's no wonky camera tricks, no cutting and splicing video to make it look like I won when I lost. It is fully live, fully transparent, and you will not be able to find anyone that is as close to being as transparent as this. And so you guys can watch me sweat it out. If I start sucking ass, and hey, that's what happens. If I start killing it, hey, that's what happens too. But the whole point is we go on a journey together. And as a marathon is a marathon, it's to take your time to grow an account appropriately. And you guys can see how I do it. Everything from position to risk management will be demonstrated here. So do not copy my trades, number one. The fact that I'm live on YouTube is not an invitation for people to go, ooh, let me copy what this guy's doing. Trade at your own risk, by the way. Don't follow any stranger on the internet to do anything related to your money or whatever. Please don't. Trade with, you know, be smart. This is to demonstrate my own trading. This is not to influence or advise any of your own trading as well. Just have to lay that out there. Okay, so as markets are getting started outside the DD band, it's going to be just nice and sit out right at the start. But I'm going to get the Rocket Scooter calcs coming right in a couple minutes here. So we're going to hang tight. I don't make any trades at the open. We're outside the irrational DD bands. This is the thing that we teach. We're about to get futures data into our platform. So what Rocket Scooter is while we're waiting. It is a trading platform we've been developing for 3 years. We currently have released charts, scanner, and watch lists for anything from swing trading to options trading. We have something for everybody. I can find all my plays using the techniques and tools we have. We do something called positional risk analysis. It's not technicals, it's not fundamentals. So we can look at Wall Street's positions and the positions of market makers. So we have a better view of the market instead of trying to look at shapes, colors, and patterns, which everybody else comes from. If you want to see Rocket Scooter in action, as you always have talked about it, this is your time to actually see me use it. So feel free to click that like button very rapidly for me. Smash it really hard, but not hard enough that you break your mouse. And we'll take a look what's going on. So my steps in the morning are very simple. And of course, what I'm not going to be doing is a lot of teaching out the door. So normally on the YouTube stream, you guys will hear me teach or teach a lesson. I'm going to be trading. I might even be silent. I might have the camera on some days I might not have the camera on. But I'm going to be trading and maybe answering your questions about what I'm doing. But I invite you to watch the stream. Talk to me about what I'm doing. We can engage with you guys and gals. But at the end of the stream, which will probably be about an hour and a half long, we pivot into YouTube and I go over an educational session on why I did what I did and how I use the tools to do it. You're all welcome to come to that. Go into our Discord. If you guys have never been to our Discord, say, hey, I've never been to our Discord before. We're not a paid Discord or Discord service or anything. This isn't a plug to get you over there. Discord comes part of the Rocket Scooter team. So if you have our software, you can have Discord for free. Type in chat, hey, never been to the Discord. We have an extensive library of all of our tools, all of our training. Just click that button right there and you can head on over and check it out. So right out the door, let me mark some things and show you what we're looking at. So I have on, I think this is an old gap fill. Yeah. So let me go ahead and remove this. So first and foremost, what I always try to do is I like to mark my upper targets, right? So right now I'm going to use a daily chart on SPY. When the market opens, I look at SPY, I look at the VIX, and I try to get a gauge of what's going on. We've moved very quickly into what's called irrational territory. The market's gapped up and moved up too quickly. We are also in an earnings week, so it's very silly to try to guess on directional market. So I don't. And right now, what I'm going to do is I'm going to take it pretty easy and just relax for a minute. We are outside of those irrational bands. What I want to do is I want to see the market dip into them and maybe take a scalp. So today, when we open outside the bands, automatically my position size is going to be small if I do take anything. I don't like to chase green candles on the go. And what you'll notice, if you've ever seen any of our other challenges, I trade with a pretty high win rate. I know that might say like everybody can say that, but I actually show up my statements if you guys want to. As a matter of fact, after this, y'all are all welcome to come to Discord. I'll show you the statement from the last challenge. I maintained a 60 to 80% win rate. Why? Because I don't trade that much. I only trade when I see an opportunity and I strike hard. Out the door the last challenge, I also went on a 70-day win streak from the very first day. I sat out a lot of days too during that streak. The whole idea is not to lose if you can help it. Instead of trying to gain really rapidly, it was to try to survive as anybody out there trading is doing. I'm going to show you all those tactics. So right now, when I wake up and say, man, it's a sit out day, you shouldn't say, oh, this is going to be boring. This is going to suck. Well, I'll explain to you how I know it's a sit out day and how I know not to trust what I see. There are specific tools that we use that are going to be very key to that. These two green lines that I've marked on my Rocket Scooter platform come from one of the techniques we do teach. Anytime the S&P, NASDAQ, or Russell breaches one of those bands, the market's called irrational. So from here, I don't really do much. I kind of have to wait and see if I get anything that looks a little better. Market needs to come to be in rational territory for me to want to make a scalp. And today, the only scalp I can see that would even be possible would be right here. Let me draw it on my screen. Okay. So anything outside of here is irrational. Okay. So the way that I like to measure this and show off this irrational above here. I'm not going to do anything up there. I'm not going to do anything down here. As soon as the market dips inside of here, it's back to what's called being rational. And as soon as I get the flag, the market's irrational, then I go and I look at the liquidity map. And the liquidity map will show me where buyers and sellers can be. And so if you go to our Discord again, there's the link in the chat. Liquidity map is this cool little graphic with this awesome spaceman. And it's kind of like a flashcard. And what it does is it shows me where buyers and sellers are and where hedging will be in the market. So we do a lot of analysis based on hedging and positions. Everything we look at are existing positions in the market, existing bulls and bears. An example, if you guys want me to show you something, since I'm kind of chilling on my trades today, somebody type in a ticker that you've been looking at, and I'll kind of show you how to analyze your favorite ticker, like a stock that you've been looking at. We had Tesla earnings yesterday, a good example. So type some tickers in chat, and I'll show you kind of what I do and look at. You want to look at Zoom? Okay. Yeah, everybody throw up your favorite tickers. We'll start showing you some ideas and how I look at it. So an example is like if SPY was rational and it says a BLU, what I do is I go in and I look at this, and this will show me where the positions are in SPY. So an example, you can see that there's a bull zone and bear zone and bull zone. This is actually real active bulls that are positioned in SPY. We get this information from options data. These are actually market maker options inside of this gray box. So I know where the market makers are positioned. That's our technology. This is what nobody else does, and that's what puts us ahead. If you guys are just tuning in, feel free to click that like button in the stream. I'm going to give you a little quickie tour. Now, I'm not always going to teach like this, but since it's a sit out day, I'm just going to go through a couple of cool little platform things. You look at the bottom, about to start drawing. I match the letters to the letters. And what this actually tells me is that there's active bull positioning, and you can see right here, that's where it is. Okay. So I know that the market has a bull bias because we're opening in bull territory. This dark gray is bull territory, right? Another thing is I look at this number right here, which is a bias of all positions in the S&P. I'm just getting an overall analysis of the market before I start pulling some stocks out. So if it's an overall bull bias of the S&P, then I already know that this is support out the door. Well, number one. So this is my support for the day. Number two is I have these little guys right here. The letters are just basically guiding my eyes to where I need to go. These are some letters, and this is automated on the chart at 9:30. 9:30 will give me all the information, and these calculations will stay there all day long today. B tells me that I'm in a bull zone, and then this is telling me that most of the stocks are bullish. Anything greater than half means that I'm expecting the bull zone to stay as support. This is a bias ratio, very, very, very strongly bullish today. 86% of the stocks that have bias are bullish, which is great. So the index itself is going to likely be bullish. The other thing is I look for these pivots. So this is market maker hedging here and here. So these yellow and blue hedge pressure and monthly hedge pressure where I expect to see buyers and sellers step in if the market does dip. So an example is what you see here is if we open and start to fall to blue, then I can expect some buyers to step in there. So automatically today, if we step into rational territory, if we hit here, I'm willing to long right to there and call it a day. That's the only trade I can see that's even worth doing. And when I get here inside of this redistribution zone, I'm going to check another one of our indicators called resilience just to make sure the market has stability, and I'll take that long. So right out the door, I can do some calcs really quick, 401.5 to about 403 and some change. It's about 1.5 points, and I use a 1 point stop. So if we do dip there, it's 1.5 to 1 risk to reward already. So I already know that my setup is pretty good, 1.5 to 1. And this is an example of how I think and how I'm going to make my trade. I've already planned it out. Risk to reward, that's great. I'm going to long at 401.5. I'm going to double down. I put 2 L's there. Right about 401 if we dip below hedge pressure. I'm gonna stop out at 400.5. And then my conditions are going to be res is greater than 0. And no irrational signals on the VIX. So we'll double check the VIX really quick. And then market's rational. What do these words mean? Well, we have a whole bunch of videos and a whole bunch of training that we go over and teach these things. And one of the neat things about it is that you guys can join our team. Our Discord is free. It comes with the whole Rocket Scooter suite. So our platform, as the year goes by, you'll be able to trade through your brokerage account or platform. We'll have a bunch of connections, a lot of new tools, backtest, statistical backtesting, all kind of neat things that nobody has ever made in a platform we'll be making as the years go by. So we appreciate you guys tuning in and checking out the stream and being here. So you see right out the door, I already know what I want to do and why I want to do it. What happens if the market goes and goes and goes, Matt, and you miss out? Missing out is okay. I don't really care to miss out of something. I like to get something that makes sense, and I know exactly that makes sense. Does everyone follow? Give me a big fat yes in chat if you guys follow. I already have a trade plan ready to go. Risk and reward looks good. Where I long, or I'm going to long again, where I'm going to stop. So that's the whole, people always ask, you know, how do you do your trades? Well, check it out. Look, I can do this, and I can set alarms on my phone, and I can go make a sandwich. Oh, by the way, hold on. I guess you want to see, my cameras are back on too. Howdy. I am actually a real guy. I had my camera turned off a little bit ago. That's even better. I was trying to see if I look kind of all right, sliced in the dom right there. Couple of quick things to note during earnings season, by the way. So if you guys look right here on my screen, I do this video called like my pre-market checklist. And in this pre-market checklist, I detail some of these things. I keep these 5 tabs open all day long. I do the commitment of traders, something I look at pretty much on a daily basis. It changes once a week, but I'm always revisiting it just to remind myself. We make sure in earnings season we're kind of paying attention to the earnings calendar so we can understand some of the motivations. Today we have some big earnings this week. Today, Visa, MasterCard, Intel, these are some big movers, right? I like to make sure I have the economic calendar front and center. So if you guys are trying to like learn how to day trade or like what does a trader look at, these are some of those things. So today, right, we had the GDP numbers today. This is a huge deal. And you can see we're coming in a little better than expected, right? So the question is, there's no question against, higher than normal productivity against the labor we had. But right now, the problem is when we go into earnings report from all these companies are going to indicate that they may or may not have good margins on the products. Yeah, we're making more stuff. We still haven't sold everything that was made at a more expensive price. It takes time for stuff to, shuttle their way through the production line and sit on a shelf and finally be bought. So, that thing you see on the shelf right now may have been manufactured 9 months ago when it cost, 40% more. So while, productivity is up and production's up, margins are down. So we're competing between good economic data, right? Lower wages, lower inflation, better GDP, but then we got companies not making money, even though they're making sales. That's what I look at. Initial jobless claims is one of the most important things that can hint at inflation coming down. So we look at this as well. More people filing for unemployment means more people got laid off. And so as this is one of my tricks, I don't want you guys to learn, just maybe I'm gonna do too much education today, but when this guy cycles up, is people getting laid off, companies are trimming their fat. And when they trim their fat, people are desperate for a job. So wages come down because they're gonna be competing with other unemployed folks. So inflation comes down. Inflation numbers have come down all 3 times these things have peaked. Now we've been coming less and less and less aggressive on those jobless claims, which means inflation is likely making a second smaller wave higher as people are now, getting laid off. You can see that we're going to bet that the FOMC is likely not going to be less aggressive on being their hawkish stance. So what happens is when unemployment's going up, Jay Powell is like, okay, we're trying to induce some layoffs so wages come down and controls inflation. That's the whole reason they're raising rates. It's causing Wall Street to sell off, which is going to force a little bit of layoffs. That was their whole strategy, if you guys didn't read between the lines. So if people are not getting laid off, then the Fed might turn the afterburners on again and jump back up to 75 bips. And we got FOMC coming up, next week, right? So this is telling me that I'm expecting the rate hikes to continue. 50 bips last time, maybe 50 this time. Maybe they might turn it up back to 75. If I were to take a guess, I'm going to say 50 again. So look at that. There's my fundamental assessment, my fundamental bias. Everything is kind of set up that way. And I'm not really going to trade too aggressively going into these earnings. So I might get my scalp in just a second. I'm going to trade micros. I have a rule that I use. I take the account size and I divide it by the margin requirement of the instrument. Micro S&P futures. I'll be trading mostly S&P and NASDAQ. It's roughly going to give me about 8 micros to play with. So my position is going to be totally about 8 micros at the start of the 10K. Can't only do a quarter. What I'm expecting is for them to taper off to 0 before the summer. That's what I'm hoping. And then, of course, once that stabilizes and Wall Street stops selling off, then they're going to turn on those afterburners right when QT's fully realized. So, but anyways, I look at all these things together and make sure everything's kind of okay. Financial Juice is going to let me just read what's going on, globally around the world. Anything super crazy. The jobless claims coming in lower is one of those bad news is good news things. So good news is bad news. So you might say, okay, people are not getting laid off. That's great. Well, no, not now. It's great for the overall economy. This is last week and people that filed unemployment that first week. Number one is the expectation was lower, right? And number two is we came in even under that expectation, even worse. So it's 2 really good data points for the economy and for us as humans. But these are 2 really bad data points for Wall Street, because if people are not getting laid off, the fear is that inflation is going to come back, and the layoffs are laying off the people that are, sitting at home and not really working, but still getting a full wage. And all these 5 and 10% layoffs that companies are announcing is really just trimming that fat. And that's really kind of what you want to see. Cool. Okay, so back to rocks here. Let's do some of the things that you guys said y'all want to take a look at. I'll run some stocks really quick. So right now, resilience is right on the boundary of being, 0. So if we get down here, I don't know if I likely would want to buy it because this is going to tell me the bias and pivoting of this half gap right here in the morning. Okay, so just quickly, let's double check that we don't have any weird signals. In VIX, we absolutely don't. That looks good. And let me run some of you guys' stocks. You guys look at Zoom. Okay. So imagine that the market is rational, nice and clean and steady. Let me delete some of this. Zoom's coming up as a BLD. I'll just bring up my little tool. And if you guys, let me give you guys some help here. Go to our Discord really quick. Everyone here, it's your first time, go to our Discord. And you can access exactly what you see on my screen. Give me a second to get there, and y'all can walk through one with me real quick. You know, a little second or two to get over there. Meta. Okay, we'll run through a couple things. So, as the market is opening with that little irrational signal on the S&P, all things are irrational. So you have to take everything with a grain of salt. Things have to go a little light if I do any positions here, but I'm going to match the letters with the letters. Easy as that, right? So when the letters are telling me that I'm expecting some market maker hedging between monthly and weekly levels. These are monthly options and these are weekly options. And so that pivoting action between here and here is really strong. So anything, if I was trading something inside of this, what we call a bull long and down, you're in the bullish side of the market, but you get this little bit of a downward pressure from the hedging on the monthly scale, but a little bit of upward pressure on the weekly scale. So it's a very conflicted stock, but you expect that going into, you know, earnings season, right? So the way I like to trade these is I love to scalp them in between these ranges you see right here. So I would have been shorting off of 72 if I wanted to scalp, just like yellow to blue, just like that. Or blue to yellow. So I just make my analysis like that. Again, I would do my risk and reward. I'd use a one strike stop distance. So I would come in here and I can gauge that by going here. I just want to see what the zoom, about a point a piece. So if I were short 72.5 with the 73.5 stop, short again, stop up here. From here to here, you have a 2.5 to about a 1 trade. It's actually pretty decent on the short side. Anything that opens below monthly hedge pressure, I also short against it from the bottom. These are my favorite shorts to take. As resilience, by the way, on the trade I am looking at being less than 0. I'm not going to take that long entry that I was talking about earlier. So I'm going to go ahead and avoid that. Back on SPY, let me pull back front and center. So the number that I use in this redistribution zone is that if resilience, as you see, is negative 5.4 right here on my screen, you can actually see over here as well. If it's negative, then I don't expect this half gap to hold, so I'm no longer going to buy. So now I've just invalidated my entire trade plan, even though it looked good. Now I'm not going to take it. Because what this resilience number is a tiebreaker right here at this half gap. So another tool that we have allows me to know how whatever I'm trading, the S&P is going to pivot. That's resistance, then right here, and I expect that to happen. So that's going to break and trigger my stop anyways, where I wanted to stop right there. The probability that's very high, so I'm not going to take it. Easy as that. I need to figure out a way to do this so I don't have a bar in front of my face while I'm drawing. I have to reorganize my stuff. Maybe I should put my mic over here as well. That way I can look into this. Should I maybe put my camera there as well? But I don't know. You gotta let you guys vote. You want to vote on something really quick? You want to see the part side of my hair or the full side of my hair? Which way are we going? So you see on screen, I've already invalidated my trade by seeing that this being negative is already telling me that no matter what, I think we're going down there instead. So no longs for me today. Clear as day. So now I've decided to do nothing. Nothing looks good until the market stabilizes and this resilience goes positive. Until that happens, this is a great perfect example of I think the market's likely going to do this and maybe come down. And so you may say, like, why don't you short? Well, I don't want to short against a bunch of bull stuff either. The short trade is still not that strong. So in all honesty, I want to get a nice scalp that makes sense. I don't have any justification for it today. Yeah, so like anytime you break through hedge pressure, the market's called irrational, right? So there is no trade down here anyways. So when we teach this thing called window of opportunity, which today I want to invite everybody here to come to the session in Zoom. This is what we call the stream a day. We'll have a little Zoom call. You guys are welcome to come over. And yeah, so let me no camera this for a minute because I got mics and mic arms everywhere. I'm gonna have to rearrange my screen a little bit. That way I don't have to stare at a weird looking. Would wait for a long off a bull wall bottom. I don't trade off of bull walls. Now it's possible, but again, I don't. In this example, I wouldn't. So I'll teach you guys today something called window of opportunity. I invite you all to come to the Discord after this, and I'll run some plays and I'll show you the scanner as well. So give me 1 second. Hang tight for 1 second. By the way, folks, if you are enjoying the stream, I'm going to tell you something. Indicators that tell me when to sit out are literally what I never had when I got started. I'm going to be very honest with you. We've spent years creating these tools to assist myself in having decisions that tell me markets aren't safe to trade. Everything is like, is the signal long or the signal short? None of your signals that you usually get with technicals or anything are like, sit out today. They're always trying to find a play. Well, we have 5 really solid rules here that tell me to sit out. And the market's probably going to do exactly what I drew. And even if I did get it 100% right, which remember, I didn't chase the long. Correct decision number 1. I didn't buy this dip. I said I'm going to buy here if I get there. And when we got there, I checked one more time and said, no, I don't like it. It's probably going to bounce here and continue to sell. Look at this. Play by play, you guys have watched the entire day. I've called the S&P pretty accurately, right? But I'm still not trading it because I need to get that risk and reward the way I want it, which was okay, but my confidence is very low. When my confidence is low, my bet is small. Easy as that. So small, in fact, it's 0. I'm betting 0 today. And I know it sounds like an unsexy thing. Matt, why don't you short if you think it's going to fall? The goal is to trade when things stack up to have a high win rate, not to try to chase something that, even if I'm right, I don't like to take all of those trades, especially chasing shorts outside of what's called the window of opportunity, which I'm going to show you and teach a lesson on that today. So I invite you all to come to the Zoom call that we do, which is to our members. And you can go to the Discord and access that for free, especially if it's your first week. It's more educational. We'll go over that. Okay. So hang tight 1 second. And I'll tell you, to me, it's very empowering to sit out. Do y'all agree? I love it. To know, and I'll be able to spend the rest of the session going over some of the rules I'm using and some of the goals of the challenge. And again, it's a marathon, not a sprint. So that's the best part. If you guys are wanting a few other things we can look at, the DD trade always works. Yeah, the DD trade is pretty good. It's something that I haven't really explored trading personally myself in an irrational territory. So that's going to be something new to look at. I think Karan, and what he's talking about is very important. I'll mention that in a second. By the way, we do have a subreddit. If you guys are on Reddit, feel free to follow that. We're actually going to do my longer posts, my longer discussions, my longer fundamental analysis and things. I'll post in there as well, not just the technicals of the trade setup. And as you guys see, right, it's pretty good. Y'all like what I did? I mean, I pretty much called every pivot and I still haven't made a move yet. I didn't chase long at the highest. Some of you may have seen that, but really neat, right? And so with trading with controls, I've learned as I've gotten better over the years. This is year 13 of trading, by the way. If it's your first day here, you know, welcome to the storm. It's going to be great. Y'all are going to love it, hopefully, or hate it. I don't care. Stay here, though. And check out everything that I'm teaching here. We will have some lessons on this in the Discord. Every day I'm going to teach one very powerful tool. We have 15 different things, swing traders, day traders, you name it. After these Zoom calls, I'm going to go over one of these tools every single, after YouTube. So we'll have a Zoom call in about an hour. They'll be recorded and posted in Discord as well. So you can always tune in if you can't tune in during the day. And then right at market close, we'll have a demonstration session to kind of go over all the different tools that we do here. Okay, so let me do some of y'all's, some more of your, just some examples before I explain why I'm doing what I'm doing. But GE, if y'all want to throw me some more tickers, I can come through and keep analyzing them. GE, BSU, I come to my shortcut flash card. BSU has only buyers at monthly hedge pressure and nothing in between. So when there's no arrow in between, I do absolutely nothing. I don't expect any buyers anywhere in here except for bull zone, DD's positive or greater than half, and of course monthly hedge. So this is showing me there's a little legend at the bottom too that helps. These are all calculations that we give you. This is actually market maker automated buying and selling. What these hedge pressures will actually do, you guys, they'll predict the highest volume of the day of any stock or anything. It's predicting more volume. All of our techniques do that. It's different because technical analysis tries to predict price action, which we think is impossible to do. If you ever failed trying to use technicals or trying to use a technical algorithm, well, that's the design of it. They failed. They don't predict anything. What you can't predict is where volume is, because options are exercisable and people will buy the stock there. If market makers sold an option here, then if that option goes in the money, they need to long or short that thing to offset that risk of that being exercised, because they'll have to have that position to fulfill the option, right? So the options assignment. So volume will appear anytime you see those yellow and blue hedge pressures. Doesn't mean that the market has to pivot in that direction. That's not what the arrows mean. The arrows mean red means sellers, green means buyers. So with the example with this one, if I'm trading in the middle, market's in the middle, I'm not going to do anything until I know the biggest burst of sellers. If I wanted to short, then I expect the biggest burst of sellers to be here. If I wanted to long, I expect the biggest burst of longs to be here. This has to do with delta hedging, and it's very accurate, as a matter of fact, extremely. So I don't pivot or trade anywhere against, you know, where there's no proven volume to just appear. Everything else, everywhere else is random. There will be bursts of volume at these places. So if I wanted to long, I will wait until I get what I want, then take a long and bet that the buyers win that volume race, right? This doesn't say it has to do this. It says if I want to short, I'm shorting from there and exiting there. If I want to long, I'm going to buy from there and exit where the sellers are. Market makers are looking for buyers and sellers. Well, here's a map that's telling me where they are. That's why we call it liquidity map. This way we have that entire tool suite that goes over that. So an example with GE today, I'm BSU, and I'm going to come here and say, okay, in BSU, it's definitely bullish in that call wall zone. So like way down here at the bottom, there's possible entry from here, which looks good. And it's also supported by the fact that the majority of the stocks are also bullish in the S&P. So likely there's support from here to the middle of the range. And so for GE, like I would have done absolutely nothing and still do absolutely nothing and still do absolutely nothing. When GE bottoms out right there, there's likely bullish support against that hedging resistance in the middle, and that's what that one shows me. So if you were, as Karan was saying, an adventurous trader, there's likely a little bit of a scalp off of that bull wall, but only a scalp, right? Days like this, I just like to get in and get out super quick. Yeah, like I know, and that's one of those things, that's one of those new emerging techniques that we have. It is, you said 85% win rate for you. It's very strong, very, very strong. So we haven't like fully back tested it enough to say so, but yeah, I like on the surface, to me, it feels like it's about 90% accurate. Like it's almost always right. And one of the members is saying that they use one of the tools themselves to play off of this bull wall. If this is greater than half, it's one of our newest developments. So we actually haven't fully back tested and explored it. So I don't have a trade roll off of it usually, except for this one particular setup. So Tesla, right? Tesla had earnings yesterday. Let's take a look at it. Super quick, same thing. If you guys are like, how do I get this software? I'd like to play with it. Well, you're in luck. It's free for a week. You can literally just go here, everybody. Sign up. No credit card required. There's no, if you don't like it, just it kicks you out after a week. Easy as that. No credit card. Won't take any payments, nothing like that. So just go check it out if you'd like. You can use all the same tools. I'll show you how the scanner works as well. So last one, Tesla BSD, right? Same thing, right? Tesla's in that same boat. Now the difference is these yellow and blues are on top of each other today. So Tesla, it's the same thing. Resistance against blue, or it's just 160. And then I'm looking for the market to fall the next resistance, which we need to calculate what that is. It's a whole nother technique. I'll go over that today, but I'll just kind of give you a little quick and dirty. Next resistances are very easy to find, especially when you've just had earnings. Horizontal array, I always like to mark my gaps, right? So first and foremost on Tesla, there's a gap fill there, and I use a white line. Another thing is I'm going to go kind of on post earnings, and we're going to do this rudimentary thing called a red line. Now let me, I know it's going to draw an ugly fib thing on my chart. I just need to mark this about. Let me zoom in. I don't use fibs, so don't throw up all over your desk really quick when you see me using this. This is just a ruler that I'm using to measure something. You have any questions so far for me? So looks like when we had the call, right, it moved up, came back down, so earnings have already priced themselves out. So I'm going to do is I'm going to look for evidence of, where's my zero spot here? Okay. I'm looking for evidence of illiquidity. It should be right here. I'm going to mark this little line right here in the middle. And that's these are my resistances on Tesla. Make this one red. It's called an impact. This is another technique we teach. So today, Tesla has a bunch of things it can play with, right? The downside has a resistance here to balance the illiquidity of the move up. And of course, the gap gets filled over here. So today, no action on Tesla. If you are a bear, shorting against the monthly when you open below monthly is always what bears do. That's bearish hedging on Tesla. So I would say that today, I wouldn't be surprised if Tesla did come to here. But again, it's going to take all day and not be so actionable. So when it gets there, I probably wouldn't buy anyways. But I think Tesla might be on that path there. Anything that breaks up through monthly hedge is always a gamma squeeze. So that's a big breakout range. Clearly, Tesla has none of that. And inside of this range in this BSC, there's no evidence for me to want to take any kind of long. See how it's chopping around but drifting lower? Again, liquidity map is showing me that there's no buyers. So it's really cool how this works, right? Every single one I've showed you is... You know, if I'm looking for sellers, I expect them to be here. And if they are anywhere, they'll be here. And if I was trying to long Tesla and I hit those sellers and it started pulling back, then I'm not going to bag hold while it continues to drift down to find the next place of where buyers will be, which is what that is. Okay. Whew, cool deal. All right. Any more questions? Bull wall support pretty well. Yeah, that's a new thing. Yeah, so pretty chill, right? Pretty chill day. Resilience is starting to become positive. So SPY is looking slightly better. And I'm kind of reversing my stance on maybe I should look for a play. I'm just going to double check really quick. Right, this BLU is all right. But again, from here to here, resilience is very much on the fence. Let me double check NASDAQ. NASDAQ's looking strong. So even if I did take a long here at hedge pressure on SPY, my limitation just goes to about right up to these bands. But we've already touched the band, so ideally there's no evidence that the market's going to do much. I might, you know what? I might take that risky play, as again, it's not one of our rules, but irrational on hedge pressure break is another sit out rule. So the interesting is that the window of opportunity is a sit out here and a sit out there. Anything that bounces here is very risky, and it only plays inside of this range here. So it's like a teeny little scalp with a couple micros, right? Res is positive almost, right? Jordan Hayes is saying, oh, thanks, Matt. Appreciate it. Yeah, so it's flipping because when you're on the short, you're jumping from one side of hedge to the next. It will flip. It's going to tell you what it really is at right now. So today, yeah, the question is now the original trade I won, I invalidated, which was a great idea. Decided I'd sit out. Said it would go up and likely come back down. Again, avoiding that. I don't like to short on bull markets that sell off and fade. The question everybody has for me now is what happens if you get down here and start to trade? Remember, if resilience is negative, then this is resistance if you're outside of the distribution zone, right? So the problem today, Karan, I'm going to be very careful if you hit here. It's a long, if I'm in a long, which is what everybody is saying. A lot of folks here love to take these bull side longs off of bull walls, because when you open in bull territory on the S&P, you stay in bull territory 96% of the time. That is a stat from our back test. So that's how strong this is, and that's why everybody's urging me to take it. 4% of the time, you will cross from bull to bear zone, usually catalysts or whatever. Yeah. So the neat thing is some of the stats, and again, it's a back test on the S&P, so take it with a grain of salt, is that when you open in a bull zone, 96% of the time you will close in the bull zone no matter what it does. You're going to either dip and stay or rally and go. The other rule is if you open above hedge pressure, 89% of the time you will close above hedge pressure as well. So the stats are pretty good to say that, you know, that's expected for at least a scalp. But when I get here, and of course, this being greater than 1/2 is telling me that I'm expecting that to support. Okay. The stocks, however, are selling off a lot more, and the color coding here, which I'll go over a lot of that today in the session, means that this is resistance inside of the zone, okay, which is what we're seeing. But outside of the zone, this becomes resistance if it breaks the second time, right? So right now, it's resistance from here to here, and as it's fighting, if it breaks through here, then that becomes resistance, and that scares me into being that that could be one of those 4% days. So I'm gonna sit out. Right? So the analysis is good. I don't like what I see. Resilience pivots this half gap. Like there's an like imaginary arrow here. It tells me that's resistance, and you're seeing it all day today. Yeah. What up, Matty B? All the analysis of the market and the Fed. I'll tell you, fundamental analysis is quite simple, and people get scared of it because there's all kind of big words and terms that you don't understand. That's okay. They make up all kind of stuff, and I love the saying from, what was it, the Big Short? As they say, they use a bunch of big words that you don't understand just so they can make you think you can't do what they do, which is a bunch of bullshit. Fundamental analysis is easy. The less you know about the economy, the better. The more you just make relationships between things that are logical, then okay, you start to teach yourself what really happens, right? People are asking, how can you predict what the Fed's going to do? And I say, well, I'm looking at first-time unemployment filings. They go, how do you even relate those two? That doesn't make sense. Well, it doesn't make sense because a textbook in the surface will tell you, you know, the Fed is going to raise interest rates to, you know, change deposits with participating banks. And you're just like, oh my God, I'm so overwhelmed. You have to think of what on the surface is very simple. Powell tells you what's important. He says labor market is what matters. Labor market. Well, okay, first time unemployment is, imagine when you get fired, the first thing you do on the way home is you're filing for unemployment that week, right? So that's a rate or a measurement of people that just got fired last week. And Powell's trying to say we need to bring inflation down. So then you go, okay, what's causing inflation? Oh, wages after COVID. Everyone's getting paid double, triple. Houses are going up. So people are asking for more money. Okay, so wages will come down. Well, how do wages come down? Well, you fire people. If there's one person with 50 jobs, then they can ask for any wage they want. The jobs are competing for the worker. There's one job and 50 workers, the other way around. Workers are going to step over each other and undercut each other for the job. So wages come down, inflation comes down. Oh, well, that's a pretty cool relationship. Well, there's nobody taught me that. It just logic on the surface. And you're like, oh yeah, Powell does say labor market literally every other sentence. So that does make sense. If you really step back and think about analysis, it's very simple because people are very transparent. Don't overcomplicate it. That's what I try to tell people. What about a scalp at the bottom redistribution zone? It's super tiny. So the problem is I expect a move like here to here today. And then of course the smaller percent move will be, let me go down. Likely, this is the lower probability move, and then hits a liquidity pocket and stays there. So I don't like what I see here. Although Nasdaq is strong and it might actually give me that trade that I was looking for, it's just not appetizing enough for me to want to take it today. So don't like it. All right, let me show you the scanner. So say that you guys are like, okay, I want some bull long ups just like the SPY. Let me find some stocks that match it, right? So neat thing is you can actually search the stock market for them. And it will tell me which stocks are in that same boat as SPY. And I'm going to say, oh, okay, cool. Here's a bull long up. Now I want to pick some stocks. I want to trade some options. We've got RTX, Gold, Goldman Sachs. Let's pull Goldman Sachs. Okay. Alibaba, GPS, Netflix. So like Alibaba, right, has fallen to that bull long up pivot. And I can actually rank them by which ones are right actually at the level. So if I was looking for breakouts or breakout plays or even pivots, the Rockseer scanner, which is amazing, I can actually sort by the liquidity map I want at the exact point it's there to pivot. Pretty cool, right? So like Goldman Sachs just popped up on the scanner as being right at the top of the list because it's right on that bull long up blue bounce. Pretty cool. So now I'm not just guessing and trying to guess the trend. Maybe random folks will say, ooh, I'm going to short Goldman Sachs. And you're like, ooh, this is a great buy op for a scalp, right? So you can have a different mindset when you're looking for where buyers can be and sellers can be. And so if I tell you about these volume spikes, we don't make it up. Any stock that touches or interacts with its hedge pressure, you will start to see the volume start to build a little bit as it interacts with it. If it touches it, it's going to spike even further. Does the lower bull wall strategy have the 90% when the monthly call wall is much lower? The correlation of that, I'd ask, I think Karan was the one that was talking about it. I wonder if he has any insight because I don't have much data on that percentage. I haven't done that trade that much. I would say that does monthly consider a strong when the monthly call wall is lower? That's a great question. And I would say that I wouldn't consider monthly call walls to be strong at all as far as an indication of the weekly pivot, like the day-to-day pivots, because those things are positions that are parked for months, if not quarters at a time. So there's no indication, like if he's saying monthly wall. So a monthly wall is looking at where the monthly options are. Those positions are parked and pretty much hedged already. So there's not a lot of power on those walls to really indicate much. I wouldn't consider that as part of my analysis on the surface, but it could have some correlations. We'll have to see. All right, I'm going to give it 15 more minutes on the stream, and then I want everybody to go to our Discord really quick. As soon as you land, one of our admins will give you link access to, or will give you some guidance on where all these pieces are. If you're like, where do I get the liquidity map? Where do I find this? Where do I find that? We'll help you really quick. You have about 15 minutes to head over there and check it out. I'll go into a training session today and go over some of these tools and kind of what I'm looking at. You know, Matt, how did you know to sit out? How did you not take that long? How did you not chase that long? All these little rules. Even if you're a swing trader or an investor, even so, understanding how markets can pivot throughout the day are also ways for me to look at maybe getting a lower cost basis or setting hedges or stops on my investments. There's other things I can do than just day trade, right? So you're clicking on monthly liquidity map, right? So on monthly, you're going to display the monthly. The monthly support is here. So the stats on monthly support holding, we always assume it's the same stats as the dailies, right? So you would say that over the course of the month, between now and February 17th, that there's a 96% chance that this holds. So if the monthly wall is lower than the weekly wall, then it means that there are people that are more bullish as time goes by because they're willing to be bulls lower. So what he's saying, and let me go ahead and preempt this. So let me do, what are you talking about? SPY, AJ? Or QQQ? Resilience is back to being positive, so looks like that bounce is coming through. Now, one thing about resilience is it does not have a leading effect once you're irrational at any point in the day, which today, again, resilience is not giving that good lead off. So I'm not exactly excited to take it. So let's do some marks for you really quick. You said, okay, so 400, let's just say 400 is the weekly, right? These are based on all weekly options. And what they're saying, I'm sorry, that's monthly. Weekly is also at 400, by the way. right? They're both at the same. Oh wait, no, I'm sorry. You're right. Monthly is at 378. Okay. So what that's telling you is that people are more bullish a month out than they are today because they're willing to buy lower. So if imagine if I were just to mark where like weekly bull zone is like right here, right? Weeklies. This is all weekly options, not just this week. This is all weekly options that exist. So that's all weekly options over that big period of time. And this is all monthly options, which are one spot in time, right? So he's saying is if the weekly options support is higher than the monthly options, what does that mean? It means it's a stronger bull market going into the end of the month. What does it mean I'm going to be more willing to long? Maybe that's the question. Am I more willing to long at that 400 at SPY because this is way lower? If people are bulls at 378, 379, 380 on February 17th, which was just telling me, but they're not bulls right now, right? Not bulls. They're willing to be bulls in a month. Let's make a quick little inference on what that means. Maybe you guys can think like a trader outside the box. People are not bulls right now. 400 is the cutoff. Right now they're bears, but in a month, all through here, they're more willing to be bulls. They want to jump in and be bulls, but later in time, not now. So the question he had is 400 a good support because this is more bullish? How do you know it's more bullish? Well, people are willing to buy lower instead of short. So if the market is 400 is where bulls are parked, anything below 400, people are ready to get out of the way. But as the month goes by, people are willing to buy lower and lower and lower. Give me a on the surface explanation of why you think that is. What happens in a month, or what ends in a month? What's going on right now that'll be over in about a month? You'll be safer and more secure and willing to buy lower. So this tells you exactly the answer to the question, right? People are allowing the market to have some volatility for earnings and willing to buy the dip when things dip. So that mentality is what I have right now too. So I'm not super eager to buy the dip right here when people are expecting to be long as low as 378, like a 220 point drop on the S&P, right? So it's telling me that over the course of earnings, the market's prepped for some pretty solid volatility. And so when I tell myself people are more bullish as the month goes by, then on the surface, you are correct. In theory, every moment in time that passes, the bull signal becomes slightly stronger. The probabilities, we do not know, AJ. Are you a stocks AJ or a different AJ? It's a great question. We don't have that data. We haven't acted upon it enough, and it's so infrequent, right? Breaking monthly bull zone to bear zone, it just almost never happens. It's very rare that we see that. So we don't have enough statistical data, and it only happens, so rarely. It's hard to say. You're yawning in Discord. Oh, okay, cool. So great question. And I would say that on the surface, because weekly walls bottom out here and monthly walls bottom out way down here, that it makes this signal stronger. As every minute goes by, inching towards 217, people are more and more and more bullish even at a lower place. It means people's sentiment is becoming stronger. Does that make sense, AJ? And the monthly map thing that we're releasing in a week is going to really cover that. It's a pretty cool little technique. And I'll actually go over some of that today as well. So if people are willing to buy lower, it means at that point in time in the future, it's becoming more bullish as the minutes go by. So on the other hand, if I did monthly and in the monthly walls were up here instead of here at the bottom, then I would be less prone to take that trade. So what actually he's talking about is a new technique that we haven't really created a lot of stuff on yet. It's this edge of the bull zone is a long signal because of that 96th percentile. When that is greater than half, it means the stocks are also supporting their bull zone. So the S&P is likely to follow. The question being, how accurate is that? And it's funny that even on the stream, that a lot of folks here are theory crafting as we go live. So I think that one of the rules is if monthlies are lower, then that strengthens the signal. That strengthens the signal as well. So I actually would love to take the risk and maybe just see if that actually does work. From here to here would be a great little scalp. And again, this is the original trade setup that I mentioned that I wanted to get. I just scared myself out of taking it, and I would actually exit right there. If you go to the beginning of the stream, it's exactly what I drew. And while it did not necessarily sell off because some of the stocks caught some ground, this would have been the play I would have made. I would have, if you go all the way back to exactly what I wrote. So I go all the way back and I'm scribbling a bunch. It was, I was going to long here, stop at 400, and then trade right back up to those bands and call it a day. And look, didn't take it, but that's exactly what happened. So again, irrational markets tend to be a little choppy, and I scared myself out of that, but you know, I essentially drew it out for it to happen, and it happened that way. Small account challenge, I don't like to take risky things even if I could have predicted it. And too much risk, don't take the trade. Somebody took that play. Thanks, RS. You did get a little shaken by the chop. Yeah. And the whole point of small account challenge is to try not to lose. So being as good as you can at trying to pivot the market is one thing, but then the next layer of success as a trader is to be able to say, I just don't like the odds, so let me sit out. So sometimes you may get like, you know, pocket jacks on the flop, but then you may not, you know, want to play them anyways because you're kind of staring at the board and you don't like what you see, and the odds aren't that good anyways compared to, you know, and again, you take your own risk. You're done for the day. Yeah, so this is the end of the day. Day's over. So everybody, go to Discord real quick. We'll get you in the Zoom. Do a lesson on window of opportunity. Here, irrational. Here, irrational. No trades after 14 o'clock. Here, random. So the only window that we have to trade in is here, right here. That's it. That's it. So somebody just said their day is over. You're a very good student. You have learned from us. You only trade when it's rational and inside the time window, and that's it. And that's exactly what I set up this morning. Didn't take it, didn't take a loss, didn't take a win. But day number one of the challenge, as you'll see, the rules I'm going to follow. Just let you guys know, this is a self challenge. I did an open challenge on YouTube for anybody to want to go head to head in the challenge, and the transparency scared off a bunch of people. Once I started saying you need to post a statement, continuous history, and all the stats, nobody stepped up. So I'm going to challenge myself just to follow these rules. And they're as follows. So what I'm doing is the net lick of the account divided by a margin requirement. And I'm going to be trading S&P and NASDAQ futures, just so there's no, you know, YOLO shenanigans. Just trading something robust. Futures is some of the easiest things to get started when you're day trading. New traders don't know that. Futures is very risky, by the way, but if you understand the risk and you do stuff like this, this is going to start me out about 8 micros. Okay. The average positional range of the S&P is about 30 points. A micro is going to give me 125 bucks for every 10. So 375 up and down on a max 30-point day on the S&P per micro. Okay. So if I get the worst, I mean, I don't even follow my rules and I have a deer in the headlights. Balancing my risk like this, 3 times 8 is 24. It's less than 25% of my account, right? That's a lot. Again, I don't ever hold for 30 points. Jesus, I only hold for 10 at the most, upside down from my stop target. But even so, the average risk interval is 30 points. If you guys just know, if you've been a Rocket Scooter for long enough to understand that this equation is based on that risk interval to tell me if we do span these DD bands and I'm bag holding the whole way, I'm roughly going to lose 25% of my account at best, at worst. So it's a safety mechanism for me to make sure I don't trade any more than that rule. It's a pretty cool rule, right? And those of you trading futures, I step up. So as every about $1,000 the account grows, I'm going to add 1 micro, and then it's going to be 1, and then 2, then 4. It exponentially grows as that grows, right? So that's a great rule to follow. So no YOLO race. No, I'm going to go in heavy at the start and just start pumping it. I'm going to try to have the account grow just like that. And that's what the last challenge did. It's you weigh You weigh your risk appropriately so that your drawdowns don't like go more than 25% on the worst possible day. You fell asleep at the wheel, you had risk on the table, and the market just completely collapsed. I hold like 10 points below my stop, and if you hold more than 30, you're deer in the headlights. You're still slightly okay. So that's not over leveraging rule. Okay. Rule number 1. This is for futures. The net lick of the account divided by the margin requirement. Where do you get that? I'll tell you today in the Zoom. Get that from the CME group. Roughly about 8 micros at the start. Number 2. I'm going to try to target max DD of the account, max drawdown. Anything more than 50%, if I lose half of the account at any point in time on a drawdown wave, the challenge will be considered over. And even if I'm making money and I lose more than 50%, I'm going to call it a day and we're going to start over and grow again. Even though I would have made money, I'm going to reformulate what caused me to lose that and come up with a new rule and try not to have that happen again. The point of the challenge is to learn something and demonstrate all the techniques I use. So if I drop greater than 50%, we just say that the challenge ends. It's a win because I made money, but we'll say the challenge ends. Okay, ends the challenge. Ends. It's not a loss. You didn't lose. You didn't make it to the target goal of the challenge, but if you lose that much, it's just a psychological thing. You need to revisit something you did. If the rule up here is to say on your worst possible day, you know, if I'm trying to just lose 10 points in the S&P and somehow I'm not paying attention and I lose the 30-point span because I'm just being dumb, that should limit me to about roughly 25%, right? Loss. But if I'm losing 50% of the account, I'm doing something wrong. I need to reformulate. So rule number 2 is like, if you're just hemorrhaging money, you need to step back and just call it a day. End the challenge, wait a week, start again. Psychological rules is very helpful for new traders, and I want you guys all pick up on that. All right, Owen, see you later, bud. Every trade that I take on this challenge will be on YouTube. It will be streamed. Yes. If it's not streamed on YouTube, it will be streamed in Zoom. It will be live, and there will never be a posted video after the fact. It will be streamed live. If it's streamed live in Zoom, which would be like in the afternoon, if something comes up like in the afternoon, I take the trade, I'll record it and post it. But if in the rare instance I just don't record it or I forget to record it, the continuous account history is going to be shown anyways. So every day I'm going to show the history. So it doesn't even matter. If it's not, it's just a luxury to stream it so you guys can watch it. I can imagine I might be on vacation or something and not be able to stream or record 1 or 2 days, but if I might make a trade, either way, it won't escape your visibility. You'll see the same graph every day of extended trades. So I'm going to literally try my best to do nothing off camera. But if I do take trades, like when YouTube is over, which is now, I'll be in Zoom when I do it. So I'll just show you guys in Zoom. If you're members, you'll be able to watch the whole thing. Be rare, but like I said, I don't trade past 2 p.m. Eastern, but there's a little lunchtime window I might want to do something. Okay. So max CD ends the challenge. So these are my positioning rules, and then I'm gonna just grow and grow and grow and grow and grow. Or drop to 0 and fail. But these are the rules. This will end the challenge, and this is the position size I'm gonna do, and this grows as the account grows. My next real rule is I'm taking a 1 strike stop below a support pivot, below or beyond a support pivot. So an example would be here. It's a 1 strike stop. So the S&P is going to be 10 points on S&P. It's 10 points S&P. So like I want to take 10 points, no more than 30. If I know 30 points are possible, my position's small. If I know it's just about 10, then my position's big. So I make my position size based on that. 1 strike distance, about 10 points S&P. QQQ is what? 40 points? I don't know. I have to do the math again. Maybe like 40 something points. Nasdaq. Something like that. So again, I'm going to look for, this is going to be my chosen stop rule for that. One is to help with that. So these are the rules I've always used trading futures. They're very good. I mean, very good. The reason they're good is they're controlling the risk you take, which is people say futures are risky. Hell yeah, they are. You can trade hundreds of times your margin, like in futures, and stocks don't give you that ability. You can buy $1,000 micros for 50 bucks. You're already 20 to 1 on top of something that's already leveraged against the index itself, point to point. So it's like leverage on top of leverage. Futures can be crazy. So let's control that by limiting my max position size. Okay, that's it. These are the rules I'm going to follow. So again, like I'm going to be inching forward. 100K at this rate typically takes from 10K about 3 to 6 months. So stay for the journey. How to trade futures, right? Yeah. So this is what futures are. For first and foremost, I said I would likely to make a trade there. I scared myself out of doing it, but this ends the day. I'm gonna go over all the rest of that in a little bit. So everybody join the Discord in about 30 minutes or so. I'll let you get situated. Me and the admins will be there to help guide you guys to get the software up or to kind of like get some of these rules down and follow what we're doing. But I tell people these positional rules right here are the most important thing. Whenever you're doing any kind of small account growth or growth challenge, you always have to set your rules, okay? So make sure if you're taking notes, and I'll write it again, max position size. I'll tell you all that rule later. No position will ever exceed this equation in futures. Take your account size, net lick, divided by the margin requirement. And this comes from the CME group. So I just explained why, but that's a really cool trick. Cool. Number 2 is if your account, again, just rewriting them, account takes a 50% drawdown. You need to stop. If you're losing half of what you've gained over any course of time, you just need to stop and take a break and really just take a week or 2 off and study what happened and be like, okay, I was doing great, but why am I losing money? And you just figure out, was your strategy bad? Was your position bad? Your psychology bad? Maybe you went on a massive win streak and just got overzealous and just, you know, started betting stupidly because of your confidence, right? Whatever it is, account greater than 50% DD drawdown, you just need to stop, like literally stop for a while and just reassess, right? That's it. Number 2. Number 3, one strike stop rule on total position. Includes second entry. These are the best rules that I've ever used. So an example is if I were to long right here, like I said today, 401.5, and I was going to long again at 401. You guys remember, if you guys at the beginning of the stream, I'll show you in just a second. And I was going to stop at 400.5. That was my trade plan. Remember, I scribbled that up here. It's one strike stop on total position. So it's based on the pivot stop on total position below my actionable pivot, not my entry. I should be a doctor with my handwriting being so shitty. So if my actionable pivot is hedge pressure, then 400.5 is where my stop was. Now I did use rule 3 this morning on all these things. So I said I would long 3 micros, I would long 5 more, and that would give me my 8, and then I'd stop out of all of it here on total position. So if the market, total position means the market invalidates my trade. I long to get a bounce there, and I give myself a little bit more, we call a buffer, like a little overshoot, and I'll play the volatility just to dive into a position. Hypothetically, that would have put me right about there as a cost basis. My exit was there, and I said it was about a 1.5 to 1 trade. And I would have taken it, but I scared myself out of it, right? So the idea was I knew my risk and reward. 4, always no risk and reward. before you enter. These are just always no risk and reward. Come on, risk and reward. And I guess number 5 is know the window of opportunity. This is the biggest thing that we teach, and we are now pressed against the window of opportunity. The window of opportunity is now closed forever for the day. There are no actionable trade ideas today. Window of opportunity, and we'll go over that today in the Zoom call. I want you guys all come over. It tells you when not to trade. Window of opportunity, when not to trade. It's the best thing we teach. Anything above here, outside. Anything below here, outside. Anything beyond here, outside. So the minute you touch this boundary or you break down here, it's over. So today, boom, boom, from this point in time, the window of opportunity is closed for the entire day. So even if I wanted to trade, I'm not going to trade. We all learned that the other day. If you go to the beginning of the stream, and I'll call it a day once I do that, but I'll show y'all very quickly. I appreciate y'all tuning in. Do me a favor, sub to the stream if y'all like it. Beautiful to call out exactly what you want to see, and I would have closed my position out there, and look at that. Hypothetically, it would have killed it, right? We probably put $200 or $300 on that first trade, but again, I'd like to make sure I'm fully correct in everything I see before I jump in on everything. Right. Glad you had a huge turnout today. Appreciate y'all tuning in. One more time, go to that Discord. We'll hit you up with the link in about 30 minutes. We'll go to a Zoom call and I'll start training. Every day we're going to train on one technique. If you're a swing trader, don't care. Investor, don't care. Day trader, don't care. You never traded before, don't care. We'll teach you something new about the markets. Go here. Click that link. You'll have a lot of fun, I promise. Okay. Show you some more tips on Rocket Scooter, how to use this for other stocks. Right out the door. Oops, where'd it go? Gotta love these days. Where's my SPY setup? That's the wrong day. There we go. Let me pull up the stream. Okay. So if you missed or you're just tuning in late, just to show y'all. You can always rewind the stream and go back and check. Pretty accurate. How do I close the chat down? Oh, here you go, right here. I'll just put it right here. Okay. You will see everything that I wrote right here. I'm looking for the bounce to here to exit there, and that X means X out of the platform. Day is over. And that was a pretty good call, right? I knew my long, my second long, my stop, my risk and reward. Market was rational. I needed res to be 0 and market to be rational. And res wasn't at 0 above it. So I scared myself out of it, right? So you're looking on my screen. It's kind of scared myself out of the whole thing. But if you're impressed or you like this, you're like, oh, hey, look, the guy literally drew what happened, where he's going to get out, where it stops, where all these things. And he said a bunch of rules, but he actually, this is the demonstration of the rules. This is the risk and reward. You always must know that. Entries, exits, conditions, and that's it. And we teach you all of this right now. How many contracts do you start off with? It's equation number 1. Rewind the stream. It scales with the position, scales with the account size. So pretty cool. Using liquidity map, pretty cool, pretty cool. Hit the window, day is over. Just didn't take it. So from here, I would have closed out, and know how many people tried to buy on the open, got stopped, try to chase that long, got stopped. And at the start of the day, I'm like, I'm going to wait for that and get out there. Boom, boom. Just didn't take it, right? But hey, I need it to look good for me to put my money on the table. But every day it's like this. I'll find a different opportunity every day, a different stock, different play, different whatever. And you guys can stay along for the ride. Come to the Zoom call now. I'm going to go over how I get my entries. Don't fret. See, Rocket Scooter has changed the paradigm for trading for everybody. You're so used to technical analysis. That's a bunch of messy drawings, colors, shapes, crayons, you name it. It kind of clears the chart. It's a lot of noise. It tries to predict the stock market. No one can really do that. But we can predict its volume. That's the one thing we do that nobody does. We're the newest group out there to exploit new data that's available to providers, and we're giving you brand new techniques to find volume in the market. Liquidity is the mainstay thing. Big companies like Citadel routing all the orders. Every order you trade probably goes to them. They're not drawing on their charts. Using liquidity analysis just like we are. It's the modern way to do trading, to do trading analysis. Where volume is where traders are. The data is now available to you. You can actually trade where traders are. See where traders are. Don't try to guess where they were the other day. See where they are now. And do the best analysis you can with the data in front of your face. And Rocket Scooter will give you 15 different tools no matter what you do. Day trading, swing trading, doesn't matter. All the analysis tools are for different things. Stocks, futures, options, you name it. We got it. Come to Discord now and we will go through the nice little demonstration. Thanks for tuning in to the stream. We love you guys and we'll see y'all later.